Hello and welcome to the Banker's Tech Talk video series. I'm Joy Macknight, Deputy and Technology Editor at The Banker, and I'm joined by Sean Henry Kiernan, CEO of DAG Global, which aims to bridge traditional financial services with emerging digital assets. Sean, thanks so much for joining us today.
Thank you very much, Joy.
So can you tell me a little bit about what DAG Global does?
Yeah, of course. DAG is a startup. We're aiming to be the first regulated digital assets bank in the UK. We're looking to provide custody for digital assets, trading between digital assets and fiat currencies, and eventually lending. Our aim is to set up a bank because we think that's the best platform to give these services on a regulated basis to clients. We've applied to the FCA Sandbox, which is the area of the FCA where you can try out new ideas and innovation. Our main aim there is to test out the theories of what we're looking to achieve before we then apply to the PRA for a full banking license.
Okay, so how important is the banking license to your business model?
Quite. The way that this sector has been serviced traditionally has been on an unregulated basis. I've been operating in the space myself for some time. Most recently, I was the COO of the London office of the first bank in the world to service this sector, which was a Swiss bank. There's nobody yet in the UK operating to serve this client base. When I was at my previous bank, I saw a huge demand of UK clients, primarily SMEs, either fintechs or digital companies, who were looking to have a proper banking relationship. And very few banks here touch this sector because I would say they don't understand necessarily the risks or the positives of operating in digital assets. But I think we do.
Okay, and DAG Global recently released a white paper looking at the blockchain industry in the UK. What were the main findings?
We've been very intrigued to see the development of the blockchain space in the UK. We worked with the All-Party Parliamentary Group on blockchain to publish this report in Q2. The aim was to do a canvas of the whole sector. So we studied about 300 companies, and the report was just under 1,000 pages, so it was quite comprehensive. And we found that even with a minimal degree of regulatory and governmental approval, quite an important sector is emerging here. And we think London, being a city both with finance and technology, is uniquely placed to step up to the plate, we think, and deliver something on a global level for what we're terming as blockchain Britain.
Okay, but you know, obviously there's other jurisdictions within Europe that have made, are quite advanced. Let's say Switzerland is definitely one of them. How does the UK compare when you look at other jurisdictions?
I think there's quite a few jurisdictions, not just in Europe, but globally, that have put themselves forward as innovators, primarily from a regulatory perspective, with the government supporting the incubation of new companies. In Europe, I think Switzerland and the UK are probably the best placed jurisdictions. There's others like Malta or Gibraltar, which have put definitely a framework in place to support the growth of these companies. But I think these are probably smaller jurisdictions, whereas the traditional financial centres of London and Zurich are really putting an effort to say we're open for business. We're hopeful that with our efforts in the sandbox and with other efforts within the UK financial sector, that we'll see quite a big step forward in the UK in the coming future.
Okay. Does the UK have any advantages over Switzerland, would you say?
I think Switzerland's gone into the space because of the absence of Swiss banking secrecy. There's been a need to innovate. I've just published a report with my colleague Harinder Misra at GMEX in Forbes, where we've said that the UK, we think with Brexit, actually has to innovate as well. And if the government has a bit of foresight and works to say, we're here and we think that this is a good place to build, I think that the UK, being the financial centre and with lots of tech companies still moving here, is quite an exciting place to do business.
Okay. And my last question is really around, there's maybe been a bit of hesitancy of institutional investors entering into the crypto space or digital asset space. What are the barriers and how can they be overcome?
I think that hesitation has been down to the fiduciary responsibilities of institutional companies. I wouldn't, as an institutional investor, take a risk putting client money or investor money in an institution that wasn't ready to receive it and could hold it securely. I think regulation is a part of that, but I think there's also a broader need for servicing the needs of these companies in a way that you look at just standard 3 lines of defense controls, where you have a framework for ensuring that client money is respected. This is happening. There's a lot of big players that have entered into the space, and we're hoping to be one of them.
Okay. And you also have a platform for trading digital assets on an OTC basis.
Yes.
Yeah, can you explain a little bit about that?
This is currently an unregulated space. We're hoping through the banking platform that we get to bring this into a regulated environment. The aim is that we give clients access to exchange between fiat currencies and digital assets. And we think that's quite an interesting business because similar to the FX trading as of a couple of years ago, the margins are still attractive, but we're able to provide, we hope, a good service to clients because of our institutional backgrounds.
Excellent. Well, thank you so much for your insights, Sean.
Thank you very much, Joy.